It is Friday the 25th of September. Beginning of the week, we bought the dollar because basically I saw that it was going to go higher. It did, which led to the Aussie US dollar collapsing. Now, we've held just above the 100-day moving average. As you know, I had this as a buying opportunity yesterday, but we didn't quite reach it. We did bounce off it. Now, that's not a particularly bullish candle, but we are oversold. And more importantly, on the Aussie dollar, we are testing a very big trend line going all the way back to 2014. We've just blipped below it. Now, I didn't get involved in this pair yesterday because I really didn't understand what was going to happen here or at the 100-day moving average. And when that happens, you've got to sit back because you could end up doing so much money trying to get in, getting stopped, trying to get in, getting stopped. It's much safer just to wait for the signal at the important levels. So basically, I just kept my mouth shut yesterday. And we didn't trade. And I'm happy that we didn't do that. But now I'm pretty confident that the dollar will turn around. I'm confident the dollar's topped and the dollar will sell off. So therefore, we want to be buying things like the Aussie dollar. I'm hoping we get another test because we're not severely oversold. So I'm hoping we just stabilise and we drift lower and get in. We can get in around that 7,000 or 70.10, 70.00 level. New Zealand dollar held it tested the 500-day moving average, held the 100-day moving average. So again, I think that looks good. Similar sort of oversold situation on the daily chart. And we also held the 100-week moving average down at 65.26. In fact, I think that's we bottomed at 65.10. So we tested it, bounced. So I think that we should at least stabilise, maybe trade sideways. I don't know what pattern we're going to build now. But that was a double top, which kind of played out anyway, kind of reached the target. We have got quite a bullish candle on the New Zealand dollar chart anyway, so I would be buying into weakness on this one too. Forget about the yen, I haven't a clue what's going on with the yen. Euro, we've got a bullish candle. I don't really know why we bottomed there, but we do have a bullish candle, and we are in a bull trend, and we are oversold, so we want to stick with that trend. Not as clear cut as the New Zealand dollar or the Aussie dollar, but there you go. The Canadian dollar. Now this was a bit of a bugger because I had us selling here yesterday at this sort of 133.75.95 area. I probably had it a little bit low, but I did want to sort of have that level encapsulate the 500-day moving average. Now we overran a bit. I had a stop above 134.15. Well, I put my stop in at 134.15, so unfortunately I got taken out just before the market dumped. I'm hoping you didn't. But anyway, that clearly is resistance. It's a minor negative candle, nothing serious, but I think it's enough to tell me that we've topped out and that the bear trend will resume. The US dollar will head lower. 100-week moving average there at 33.73. So if we get a chance to set it around sort of 133.70, 134.00, I think we should try that and see if I'm right about the dollar reversing. Gold lower, of course, this week on that stronger dollar, hits the 100-day moving average. Now, anyway, we had a couple of support levels yesterday, and I wasn't sure which one was going to hold. So again, I just held off rather than go and do a load of money trying to figure out where to buy it and getting stopped out. We had the Fibonacci support at 1857. We overran that. We got down as far as 1848, so that was tricky. But we did hold the 100-day moving average, which as you see is around 1850, 1845. Similar picture on silver. We've got a very clear buy signal here, very bullish candle straight off the 100-day moving average. We're oversold, we're in a bull trend. This is a buy signal, and that's pretty clear. The dollar index has a what looks like a 6-year trend line. So it comes in at sort of 94.70. We didn't quite get there yesterday. We got to 94.60. But I think that tells us that the dollar's had a bounce back to the trend line and it's going to plunge. I know that we're oversold and we're looking positive on the stochastic from the weekly chart, but I'm not going to pay too much attention to that. What I am going to pay attention to is the fact that we've got a bounce in a bear trend that's hit the first 23.6% fib at 94.40 and rejected it with a doji candle in overbought conditions. And I'm going to therefore favour the downside, and I think it's worth betting that the dollar bear trend will resume. I think the stock market correction is over. The DAX has held the 100-day moving average. We're consolidating sideways. I think now that we're oversold, admittedly the DAX isn't in the strong bull trend that the US markets are in, but I think that's enough of an indication that the correction is over for the DAX. It really was a day of 100-day moving average support yesterday. Same thing in the E-mini S&P. We bounced right off it. We didn't quite get to it actually. I had that as a big support level. We missed it by a few points, but I think the fact remains that we are going to hold, and we've got this sort of little double dip on the stochastics there, so that looks like it will hold, and we should bounce. I'm just going to check the weekly chart. No, there's nothing there. The NASDAQ has held this trend line going back almost 2 years perfectly. Look how it's just kissed that trend line and held. I didn't know that this would happen. I didn't suggest jumping in necessarily yesterday. I had the support level a little bit lower actually, and we didn't quite get to it, but we've got fairly bullish candles. Well, one very bullish candle, one fairly bullish candle with a double bottom low at that trend line. I don't think you can argue with this. You've got to think that the NASDAQ has bottomed and we're going to see a significant recovery. It has to be worth trying a long position. Dow Jones also helping to confirm this. Not really a double bottom. Well, maybe I could argue a loose double bottom, but anyway, holding the 23.6% fib at around 26,550, and the 100-day moving average, which moves up to 26,450 today. So clearly that is the area we want to buy in a retest, but it does look like after this doji yesterday that the Dow Jones will also recover. So I think it is worth betting on higher stock markets and a lower US dollar in a risk-on environment today. If we're lucky, we'll consolidate and go sideways and give ourselves plenty of time to get into these positions. And obviously it's Friday, so the weekly close is more important. So let's hope we close above all those support levels, and then we see these moves materialize into the beginning of next week.